Hey, what's up, guys? It's Dre, P-Lo, this Harris, and I'm back with week 9 of Brand & Build Institute. And today, we're gonna talk about financial strategy and profit planning. Okay, so it's very important, but at the same time, this is kind of a light week. And it's a light week because we're not going deep into financial strategy and profit planning because it's a lot to this, but I'm only giving you what will be needed to get started. So that's why this is gonna be a light one, because I don't wanna overwhelm you with too much of this financial stuff, but I need to give you the basics so you will be well equipped in your business. And it's not about me showing you every little detail. It's just the stuff I'm showing you, it gives you the right framework to where you know what you need to know and you understand what you don't know and you know what you need to go do more research on. But these are the things you need to understand when it comes to financial strategy and profit planning. Okay, so the first thing I want to talk about is revenue versus profit. Okay, so what's the difference between revenue versus profit? Revenue, that represents all the income that's generated. So every dollar that comes into the business is revenue. If it comes into the business, it's revenue. And then I guess we can say every dollar, okay? So revenue represents every dollar that goes into the business, all right? So what is profit, all right? Profit is what remains after expenses, all right? So revenue is every dollar that comes in. Profit is what remains after you subtract the expenses. Okay, so we're just gonna talk about a real expensive bottle of water. Let's say if you sell a bottle of water for $10, okay, and then you just made $10. The $10 is the revenue, and then but the bottle, it costed you $2. So $2 is the expense. So that just means $8 would be the profit. So, you know what I mean? When I break that down, the revenue is every dollar that came into the business, which is the $10. So the $8 is what's remaining after the $10. So the $8 your profit, the $10 was your revenue. The $10 was the revenue, every dollar that came into the business, and the $8 is what you actually profited. All right. It's important to understand that concept. That's one of the most important financial concepts. You always want to make sure that you're profitable, making sure that more money is coming in than money that you're spending. That's the bottom line with the business. You need to be making more money than you're spending. Always, with everything you do. With every dollar you spend, you need to be spending that dollar and making sure that dollar is going to make you more than $1. It can't make you less. So always remember that revenue alone does not show financial health. You need to know that. So just because you made $100,000, that doesn't mean you made $100,000. That doesn't mean you're doing good. Because if you made $100,000, but it costs you $99,999 to make that, technically your profit is only $1. So your financial health is not that good if you only have $1. So it's important to keep expenses down just as much as you're trying to get the profits up. Keep that in mind. You can't just spend a whole bunch of money to trying to make money, because now you're not profitable. And the whole reason you have a business, a for-profit business, is to be profitable, right? And so that's what we're doing here. So we're talking about for-profit businesses. That's the thing too. Because if it comes to a non-profit business, it's a little bit different as far as always trying to make more than what you spend. It's different with non-profits. They're not set up to make a profit. They're basically set up to spend all of their profit. So they don't have profit. All of their profit goes back into expenses, basically. So it's a different type of setup. We're focusing on for-profit businesses who want to be as profitable as possible. And once we make a profit from our businesses, we donate to nonprofits, or we create nonprofits from the profit that we've made from our businesses. Okay, what's the next concept? Students, identify. Okay, so this next part is, we're gonna break this down into let's break it down, man. We got a couple other little concepts we wanna talk about. We got fixed costs. What else we got? Variable costs, and then we got growth investments. All right, so what are these things? Fixed costs, those are the costs that are gonna be the same every time, and they don't go away. Fixed costs would be something probably like your phone bill, your rent for wherever you're doing business. If you got a lease, if you got certain fees that just come all the time, like utilities and stuff like that, those are fixed costs. Those are gonna be on your expense, part of your expenses every month. The variable costs, those are the things that change. So that might have something to do with like your products, materials, if you need to outsource independent contractors, if you gotta pay people to do certain jobs and stuff like that, that is variable costs, so those vary. Those expenses change month to month. Growth investments, that's the things that's the money that you're putting towards things that actually are for the future. So it's more like investing into things like equipment and investing into traveling or to expand business and stuff like that. Those are growth investments, which is just another type of cost. But you can kind of think of every cost of your business as being one of these. It's either a fixed thing that's going to be an expense every month, it's a variable thing that's going to change month to month, or it's a growth investment to where you're spending the money now and it's for something way down the line. So just have financial clarity as far as what your costs are, what your expenses are, and what type of expenses they are. Because when you have clarity on that, then it prevents overspending on the wrong type of costs. And you want to make sure that you keep your variable costs down and you understand what your fixed costs are, because those are not going to change. So if you know what your fixed costs are, you understand what room you have for variable costs and what room you have for growth investments. You don't want to overdo it with growth investments and now you don't have any funds for your rent, you know, or you can't pay Joe to do what you need him to do today because you spent everything on growth investments. So just understand you got different categories of expenses that you almost need 3 different pots for these 3 different types of expenses that you have. All right, what else we got going on? All right, so this next thing is what, revenue projection. Okay, so what is revenue projection and how does it work? The first part of revenue, first part of how you project what your revenue is going to be is you got to know what the price is. What's the price of your product or service, okay? The next thing is sales volume, like how much of it are you selling? The price of it and how much of it are you selling? And then, okay, what's the offer structure? What type of offer is it? Okay, that's what you want to think about. Is it like a one-time thing? Is it an overtime type of deal? Is it a retainer? Is it like a $10 item, like a digital product that they can buy online? Or is it like a physical product that you have to deliver, that pick it up from the store? Like what type of offer is it? What's the structure of the offer? Like how are you delivering the offer? So how you do a revenue projection is actually pretty easy. So let's just do it for a month, okay? And let's come up with a product. Let's do a product. We're gonna do t-shirts. I like using t-shirts as an example. So we're gonna say the price of the t-shirts are $50. Sales volume, we're gonna talk about like within this launch. So if the launch is gonna be 90 days, we're gonna try to sell 10 t-shirts a month for 3 months. So that means we plan on selling 30 shirts, 30 units. So if that's the case, how much money do we plan on making in the 3 months? And what's the offer structure? It's just, you know, t-shirt. Nothing complicated. Offer structure is simple. We're just in person selling t-shirts. So, and they're $50 a piece. Sales volume, 30 shirts. Offer structure, which is just t-shirts. So then how much are we making in revenue? We can put revenue down here. The revenue equals the 30 shirts times the $50, which would be $1,500 was the revenue that we made. But if you want to figure out the profit, you know what I'm saying, that's a whole different story. If you want to figure out the profit, you got to figure out how much did the 30 shirts cost you. So we're going to say expenses right down here, and each shirt costs us $10, right? Okay, so we got 30 shirts. Each one cost us $10. So that means we paid $300 for the shirts. We paid $300 for 30 shirts. So remember, the profit is the revenue minus the expenses. So what would our profit be? Profit would be $1,200. So now there's probably more expenses that would go into this than just what we paid for the t-shirts. So the profit might be a little less than that. But the point is, the whole financial strategy is based on this bottom line being high. You know what I mean? You want that bottom line to be as high as possible. You want the profit to be as close to the revenue as possible. And you want this expense number, you want that expense number to be very low. That's the basics of financial strategy and profit planning. Okay? Now it gets different with specific products and services, but that's the basics of it. With any product or service, that's what we're talking about here. When we're talking about revenue projection, this is the formula for projecting revenue. I don't care if you're selling iPhones or you're doing nails. This is the formula to project your revenue and your profit. All right. So we got that broken down for you. What else do we got going on here? This is a profit allocation. Okay. So profit allocation. We told you how to make a profit. So now we're gonna get into the nitty-gritty. This is very important. This topic is very important because I told you how to make a profit in your business, because your business is all about making a profit. That's the whole point of a for-profit business, is to make a profit, to operate in the positive. Okay, we're in the positive. We're not in the red. We're not in the negative. Okay, so profit allocation. What do you do with that profit that you made? You know what I mean? All that extra money that you have now, all that extra money that's more than what you spent on the product or service to create it, like more everything outside of that, after you paid all your bills, after you bought all your services and products, and after you did that and handled expenses, with that money that you have left, that what we call profit, okay, what do you do with that? First of all, let's make sure it's in your business bank account that you set up. That's the first thing. It has to be in there. It's not under your bed, not in a mattress, not buried in your backyard. We need that business profit to be in a business bank account. And we already set up the business bank account, so you don't have a reason for why you didn't put that profit in the business bank account, okay? So this is our favorite part, right? Because now we talk about how do we spend our hard-earned money? How do you spend your hard-earned money that you done made? How do you spend your little profit? All right, now let's say, what was the profit? I remember it was a cool little $1,200. We made a cool little $1,200 profit, right, off selling our t-shirts. So how do we allocate that now? I guess, you're a full-time entrepreneur, so you probably will take a payment. You earned it. I would suggest not taking a payment. If you're just getting started, I would suggest hopefully maybe having another form of income, like a job or another side hustle or something, to just try to guarantee the health of your business by keeping the profit in there. Because if you can just keep the profit in there, it'd be great. But if you have to pay yourself, then it got to be considered owner compensation. It's considered owner compensation. You are able to pay yourself out of this $1,200, but it's owner compensation. Don't pay yourself all of it. Pay yourself a percentage, a small percentage of it. And then you can put it in your personal bank account and spend it on whatever you want to spend it on, but not until it goes out as owner compensation, okay? Another thing is business reinvestment. I probably should have said this first, but I'm gonna let y'all know how important it is. That's what I talked about first, was the business reinvestment. Ideally, you want to put all that back into the business. Just let it sit. Just let it stay in the business account. And that's called business reinvestment. So that means you can reinvest into your business by simply just letting it sit there. You've just reinvested $1,200 into your business just because you let it sit. You didn't have to do nothing. You didn't have to do anything extra. You had to make the $1,200, but after you made the $1,200, you didn't have to do nothing to invest $1,200 into your business. You just had to let it sit in the bank account, which is the smartest thing to do, the best thing to do, the healthiest thing to do for your business. Let the money sit, until you're doing good. There's a certain time when you should have a certain goal in your mind to where it's let that sit. I'm not going to take an owner's compensation until it gets to a certain point, and then do that. But from your first deposit, don't take owner's compensation out of your first deposit. You want to have a little bit more discipline, a little bit more delayed gratification than that, right? All right, so Dre's advice is reinvest all of it back into the business. Let it all sit in the business account. Just for the record, that's my advice. Outside of reinvesting back into the business, you got two other categories where this money has to go towards, okay? Taxes. You always want to keep money put away for taxes. So part of this profit that you made, that has to go to taxes. Uncle Sam got to get his cut. okay? You're gonna learn more and more about different ways to protect your money from Uncle Sam, but just the basics of it is making sure that you are keeping track of what's owed. And over time, you will learn more about the tax code and the tax system, and you'll learn how to pay less in taxes, because there's ways to pay less, but until you figure out how to pay less, you want to make sure you're paying what you owe, and that will keep you out of trouble. And that way you'll stay out of trouble in the process of figuring out how to pay less taxes. Because eventually, the more of this you make, the more of that they take. So you're gonna want to figure out how to pay less of this from that. But there's other places you could put this to where you don't have to pay as much of that. But we're not gonna get into that today, because that's a little bit more advanced, right? But for today's purpose, put away money for taxes, and just to be safe, put away half for taxes. If you end up paying less than half for taxes, good for you, you got some extra money at the end of the year. And then savings. It's good to have a business savings account, you know what I mean? Like the business reinvestment account, that could be the business checking account. But if you didn't took care of all of this stuff and then you still got some left over, go ahead and try to put a little bit into a business savings account. And that can almost be like your little emergency fund for your business. Or that could even be what you use to pay out your owner compensation if you needed to pay out owner compensation for something and you don't want it to affect your checking account. So that's a good way to have it set up. And that's just for beginners, because as you do more in your business, it gets quite more complicated than this. But this is enough to get you going. This will get you at least to your first, I want to say 100,000. And then you might want to like look into some more complicated things, but this will get you to your first 100K for sure. But that's it for week 9. That was financial strategy and profit planning. Like I said, I thought it was gonna be light, but it actually kind of was a little hefty. So, think about all that, let it marinate, do a little bit more research, knock out your assignment, tap in with me on the live stream, and let me know if you have any questions.